we're going to go right into our expert panel. Again, Darren from Barclays, Bill from Personal Capital, and Seb from Mastercard. Thank you again for joining us here on stage today. Playing off on the first presentation from that Billy did with Pay Near Me, I'm really interested in this general theme about inclusivity, right? The unbanked, the underbanked, digital divides. What do you see, how do you see this playing out in terms of as inclusiveness becomes more important to the future of commerce? Is it going to increase the volume of goods and services that are acquired as people cross the digital divide and they have new ways of transacting business? Or are we going to see new forms of commerce emerging? Bill, do you want to start on this one?
Is this on? Well, I have to say that I do believe that the ability to transfer cash into an electronic form is a very important thing for us to have, particularly for the underbanked segment. My guess is, though, that simultaneously it transforms the back end of that. In other words, we start to move from people who want to pay cash to pay by cash to paying a specific invoice to a specific vendor, and rather bust it up into two steps. One would be essentially funding an account, just as you would with a topping off a phone account or something of that nature. And then as a second step, then using those now electronic funds in order to pay various bills or use them for online or physical transactions.
Darren, on the Barclays side, we talked a little bit before coming up on stage about specifically on kind of digital divide and digital fluency as a way of driving commerce. Can you talk a bit about what Barclays is up to in that space?
Yeah, sure. So over the last 3 years now, Barclays has invested quite heavily in digital. I think we recognise that we were a bit behind in terms of the growth curve of mobile specifically. So we launched a number of mobile products, and we've seen significant growth. So in the last 2 years, we've got about 3.5 million people using mobile banking, and they use it 26 times a day. So you can see the benefit, 26 times a month, sorry, 26 times a day would be a bit manic actually. 26 times a month, and there's a massive adoption in terms of the service. The one thing we've recognised, though, that in any adoption curve and in any society, and just take the UK as an example, there's obviously the kind of a lot of people that just don't understand the benefits of digital. So we've invested quite heavily in, from an exclusion perspective, in looking at how we can help consumers understand digital and what the benefits of digital are. So we have a program which is basically called Digital Eagles. It started off as 20 individuals who self-selected themselves as advocates, have gone out into communities to teach people about digital. Not about banking or payments, but about how to Skype or email or actually shop online and get the benefits of that. That's now grown to 6,500 people in the UK, going out into communities and running teach sessions, going into branch sessions, etc. And I think, the one thing I think we all have to recognise across the course of, the subjects in this conference is, some great innovation out there, but fundamentally there's a whole segment of the population, not just around financially excluded, but digitally excluded. And I think there's an obligation as companies to actually help lift people into understanding how digital can be a benefit for them in their everyday lives.
Sebastian, some thoughts on the unbanked, underbanked?
Sure. So actually, part of Mastercard financial inclusion, it's the core value that's being promoted by the CEO at Mastercard, Ajay. And one of the things we need to realize is, as you mentioned, digitalizing money is important, but what does it give to the population of unbanked or underbanked is that give them the chance to access to the same services that we take for granted. And when you understand your financial situation, you understand what you're doing with your money, then you can lift you up to the next level. And that gives opportunity, like everyone here probably knows, and you can go online, go to Amazon, buy something. You have that capacity, and for you it's just something you do on the daily life. For these people, it's something new, and they can actually benefit from that. And it's giving the same chance to everyone and understanding your own, mostly money situation, so you can move up. And that's one of the important things about doing that side of the digitization.
So for all three of the panelists, obviously Pay Near Me has one approach to this. What are the on-ramps that we're going to see for bringing the underbanked or the unbanked into this world of commerce. What are some ways that you're seeing? What are some of the emerging trends that you see as these kind of on-ramps to bring them? Digital, obviously literacy is one way, or mobile literacy, but what are some of the other trends that you're seeing in this space?
So I think one of the things we see, so Barclays is very well represented in Africa, so obviously financial inclusion in Africa is a big core strategic theme for us. And I think actually starting to look at the whole microfinance and how we can partner with NCOs to actually really bring microfinance and the benefits of actually getting people into a financial relationship, whether that's community group savings to actually enable savings and loans. One of the companies in the accelerator that Barclays launched this year is a company called Dupay. They're based in Egypt, and they're looking at fundamentally how they take in Egypt, there's a lot of cash payments, about 85% I think of people are paid in cash. And fundamentally what they wanted to do is inject themselves into the wage process so they can actually make that a digital payment so that people can then use online to actually buy things and so forth. And I think one of the things you have to recognise is actually what need you're actually serving. It's not just about replacing cash, it's about, to the points that have just been made, how you bring additional benefits of being digital to them so they can get the benefits of that. So I think you'll see more around looking at how companies inject themselves into given processes to actually bring those benefits through.
Cool. Kind of moving into the second presentation that Matt did on in-store. Let's talk a little bit about POS, sort of the point of sale kind of world. What do you think the point of sale market looks like in 5 years? And then let's kind of put ourselves forward based on the trends that we're seeing. We see obviously the mobile POS trends. We see EMV. We're seeing things on mobile with Apple Pay. What do you think are the common threads as we put ourselves forward and we think of that point of sale, particularly on the retail? Let's say physical retail is kind of a starting point.
I would just offer that I think it's going to become much more fragmented than it is today. I mean, right now it's a mess. It's old hardware, it's old capabilities, and the challenge of change, particularly ubiquitous change, in a physical environment is very hard. And so I think what you're going to find is a fragmentation. The very big players getting universal, 5 years from now, within 5 years, universal upgrades to their system. The very small players, they'll abandon POS altogether and they'll go to mobile devices with a small attachment. And then it's the people in the middle that will be lagging. Sort of the relatively small retailers in particular that will really drag the ability for the entire industry to move towards universal distribution of new capabilities.
Actually, I think Bill nailed it when you talk about fragmentation. If you go to some of the small mom-and-pop store today around in your neighborhood, it's looking more and more like Japan, where you have like options between like 4 or 5 different payment terminal, and you have to figure out based on, do I pay with my mobile device, my card, what do I do? So it's becoming more and more complex for the consumer and more complex for the merchant. And at the end of the day, we need to listen to both of this entity and understand what they want to do and what is the most simple solution we can provide. And right now, we are adding complexity. So.
Yeah, it's complexity compounded by the fact that anytime you have physical requirements involved, in other words, it's not just software that's available in a connected form, boy, oh boy, the adoption rates slow down probably by a factor of 5.
Bill, you talked about the larger retailers, kind of upgrading to some system-wide technologies. Do you think specifically that the mobile POS platforms can scale to those larger retailers? Do you think that those devices and platforms are able to support these larger organizations?
No, I don't think so. And essentially because for the very large organizations, it's not just a POS machine. It's an entire centralized IT group that only has sort of the customer-facing node sitting out there, and so they're not going to, sort of rip all that centralized capability out and put mobile terminals right on the front end, and so it's going to be a longer, more expensive process for them to integrate these kinds of capabilities.
Darren, any thoughts on?
No, I actually totally agree. I think the large merchant, and you just have to look at NFC and contactless at the point of sale, how long it's taken to get scale. Even taking somewhere like the UK, where it's actually we've got 18.5 million credit and debit cards Barclays has in the market that are contactless. But still, the thing that's held contactless back is the merchant adoption. And why is that? Because actually, fundamentally, the large merchants you want on board have got to make that investment in infrastructure, and what benefit do they get from it? And I think actually, to the point, I think what you'll see is an evolution of services. So increasingly, more services made available at the point of sale through an evolution of the product and the software to enable those services to be presented, whether that's offers or couponing or lending at the point of sale and finance at the point of sale. But I think it'll be a slower process than envisaged. I think at the smaller end of the market, I think the point around complexity is definitely there. And I think you'll see more and more providers playing into that space. But fundamentally, it's solving for all the needs, not just collecting payment. So whether that's stock management, inventory, customer management, offers and generating offers, I think the solutions that win will be the ones that solve all of those things holistically. So
related to that, over the next 5 years, where do you think the greatest amount of innovation in POS is going to be occurring? Is it at the device level, or is it at a hardware level, or at a software level?
Well, I think if you include just the ability to bring mobile devices into that whole ecosystem, then absolutely it's at the device level.
That's a cheat, the device level. At the hardware level or at the software level at the device?
Well, a combination. I mean, that's. But in fact, rather than POS upgrades, bringing existing devices, general purpose devices, with of course special purpose applications, but bringing them into the world of payments, I think that's the major theme, particularly over the next 2 years.
And I'm very shy and contrarian, so it's neither hardware or software. It's going to be at the level of data. What type of data you can deliver to the merchant, to the consumer, and the device is just going to be a tool. So,
but I think on the data point though, I think there's a real risk that by the time someone cracks the data by delivering really valuable insight and using the data in a really robust way that I value as a consumer, there'll be 10 or 20 different failures to that point. And the risk that we've got as an industry is actually we switch people off before we get to the point where there's insight that I find valuable in terms of the value it's giving back to me. I think that's one of the challenges we've got as an industry is actually, everyone talks about big data and exposing it to the consumer. Who's actually going to do it well? And how many people are not going to do it well before that company comes along and does it well? And I think that's a huge challenge for us in terms of the future.
A perfect transition topic. We actually did a research paper at RocketSpace in February entitled Big Privacy, right? So it was less about big data and really about what are the trends around privacy, or privacy, as one might say. So let's use that actually to talk about authentication in one piece and the NIMI folks and what they're doing. Biometrics, obviously an interesting industry. We happen to have a biometrics expert on the panel today. And as we think of all the new ways that biometrics are being used around authentication specifically, right? Fingerprints, eye, face, voice, heartbeats. How does this ultimately play out in terms of its effect on commerce? Do those, at the end of the day, make transactions more secure? Is that the ultimate authentication solution, or is there something beyond this that you're seeing in the long term? Sebastian.
So again, it's what you have to look at is like from the consumer biometrics point of view, and what we've seen over the past 2 years actually is a big shift in how authentication was done. I know there was a slide that was showing like all the breach and all the data being stolen and accounts being compromised. What was developed, and the FIDO Alliance is an example, was to try to look at what was available and if that could be used actually to create a new experience for the consumer. So if you look at consumer biometrics, that's going to be Touch ID or the fingerprint sensor on the S5 or the NIMI band or whatever you can find. Here I have a up jawbone band. What you're seeing now is actually the credentials are being removed from the centralized database they used to be stored into the control, under the control of the consumer. And that's something that's very important because now the consumer is maybe scary, but is in charge of its own security. And what it does is, like for the bad guy, it makes your life way more complicated because now you have to go after an individual person. You can't go for the honeypot, which is the centralized database. So that's the first step where it's changing the way you can do a transaction, you can do commerce. You look also at what some of the banks and the network are doing is tokenization. Now you're actually removing the card number from the transaction, which is also another way to mostly add the security. And at the end of the day, you have to combine all these solutions to create a multi-factor authentication. And what it does is you have to find the perfect balance between passive authentication, where mostly the user has nothing to do. So that is giving my location, that's passive authentication. The NIMI band is taking the pulse, that's a passive authentication, I don't have to do anything. But there is a point in a transaction where the consumer wants to feel in control. And as a merchant or as a bank or payment network, I want to acquire also the consent. The user needs to provide the consent for that transaction. And that's when active authentication becomes important. And active authentication can be I touch the Touch ID with my fingerprint, or I enter a PIN or a password or whatever it is. It's a combination of multi-factor at the end of the day.
Bill, any thoughts on biometrics specifically?
Sure. First of all, I'm very impressed with the heartbeat signature as a means of secure biometric authentication. Very impressed. However, I think its application is, at least today, in the enterprise, not in consumer markets. And the reason is that it requires separate hardware. Anytime you're talking about separate hardware on the consumer side, you're talking about all the things we just talked about in terms of POS and then some. Because now you're not talking about tens of thousands of merchants, you're talking about tens of millions of end users. So the fact that it requires a separate piece of hardware, separate from what's already going to be distributed in phones, to me is something that makes it very attractive for high security and enterprise solutions, but not in the consumer market. And then I'd go back to, okay, what are we really trying to do in the consumer market? Most of these payments are not huge. And so we don't need to apply deep security to each individual transaction. We do need to find ways to prevent global and catastrophic breaks. And so how do we do that? The three factors of authentication remain. One, something you know, a password. Two, something you have, a token. And three, something you are, a biometric. I'm not really to give up on passwords. I think passwords have a tremendous security value. Not by themselves. But if you combine, traditional two-factor authentication, something you know with something you have, you've really cut down on the threat vectors. Okay, so what's the problem we have right now? The problem we have right now is that the credit card number or debit card number, which is an attempt to get second-factor authentication. In other words, theoretically, you need your card there in order for it to be swiped or for the number to be read. In order for that to be verification of the fact that you hold this token, that's just not very strong, particularly because the credit card number is not well protected. It's relatively widely available. I believe that, at least in the near term, the phone is the replacement of the card for the token, the something you have. And the great advantage of the phone is it's already in millions, if not billions, of pockets around the world.
So I'm going to ask an obvious follow-on question from that, which is, obviously, as we think about cryptocurrencies and some that are out there, and I'll use Bitcoin as an example, a lot of the conversation around Bitcoin is less about it as a currency and more about it as sort of the ultimate end of the scale of security from a transaction in terms of truly anonymous transactions, right? Not just the security associated with it, but anonymous as well. So where do you think we go in terms of authentication And is the anonymous transaction truly the end case here when we think about authentication in the big picture?
I don't think anonymity in the transaction is a really driving force for the bulk of transactions out there. Security, of course, is. And I'd agree with your premise, which is that Bitcoin, the blockchain, has tremendous technological appeal. But I also agree that as a currency, I think it's it's volatile. It's uncontrolled. It's not a very reliable way to actually know what you're paying for what you're getting. And I agree. I don't think the world needs another currency per se. So I'm pessimistic on Bitcoin particularly, because it's a currency, it's a traditional currency, a relatively volatile one that we just don't need. There's not a big advantage of using that currency vis-a-vis dollars or something else. And second, I don't really think that anonymity drives more than a very small percentage of the desire for various payment transactions.
Yeah, so I think it's interesting actually, because I think if you were to go across most financial institutions and ask them about Bitcoin, they've probably all got the same or similar response, which is the regulation angle, which is fundamentally how will this play with the regulators? Is it ever going to be a regulated exchange? But in reality, I think that everyone's also very curious and interested in exploring actually what the underlying technology is and actually how that technology can be applied to, be it transactions or the trading of information. So fundamentally, how could blockchain be used to actually open up international trade between two entities? How could it be used from a trading on identity or whatever other processes? And I think there's a real interest in terms of seeing fundamentally where that technology goes in the next couple of years. And I think there's a lot of investigation going on across numerous industries and numerous companies to see how it can be leveraged to underlie and underpin a number of the services that we all offer today. So I think the whole debate about blockchain will mature over the next 18 months as different plays come out in terms of how people are using the underlying technology, not necessarily as the currency.
Perfect. Let's switch gears a little bit and talk again about mobile and mobile experience just for a bit. I think those of you who have spent some time at RocketSpace know that Uber was one of our earlier folks who were on our campus and grew. And when I first started using Uber, I, at the time, thought that the brilliance of the whole thing was convenience. The idea that I could sit there and see when a car was going to pick me up, I could see where it was, and all those elements. And it took me a while to understand that the true sort of brilliance of that model was actually about the payment side, that I could put in a credit card once and never have to think about it ever again in terms of the payment transaction, including the gratuity at the end. And as a consumer, in terms of our conversations, we continue to see this common theme of that payment efficiency and making it seamless and frankly something that you don't even think about. I mean, that's the brilliance of that model, is you literally don't even think about the payment element other than when you see that 3x rate hike on the busy nights. So part of the question is, one, is that a part of the future of commerce? Do you see that the future of commerce becomes these seamless, almost invisible transactions that we make, whether through mobile or otherwise, in that Uber-like model, where it becomes almost like passive transactions that I'm sort of opting in, and suddenly I'm hiking up the fees on whatever items I'm buying. So that's question number one. And question number two, kind of related to it, do you think that through things like Uber and other apps that have a payment element to them, do they create a more loyalty for certain types of transaction backends, or is it sort of neutral?
Oh, I think convenience is a big piece of what's going on here. And I would say it's not only the payment piece, as with Uber, it's the order and payment piece. And when you can, with a very small number of touches, order the transportation and pay for it, and have the whole thing sort of out of your mind, it's extremely powerful. We're also seeing the same thing at restaurants. Specialties, you just order and pay before you even get there, and boom, all you're doing is going and grabbing a bag. those kinds...
The chairman's sandwich, may I recommend, it's specialty.
Those kinds of opportunities to streamline the interaction from the front end, the ordering, to the back end, the payment, all in one or a small number of touches, I think can create very important changes in terms of customer loyalty. At this point, it's on a company-by-company basis, but to the extent that payment networks and ordering networks can generalize that across merchants, absolutely.
Yeah, I agree. I mean, I think, I think if you look at the success of the applications we're talking about, whether that be Uber or Airbnb, fundamentally it's driven by customer designing around that customer in terms of the need and the problem you're trying to solve. And if you can take friction out of the process, whatever that friction is, then fundamentally you'll create value to the consumer. If you create value, you create loyalty. So I'll give you some examples. I think when we launched mobile banking, we actually put instant lending in mobile banking. So traditional process for applying for a loan, you go into a branch, you speak to someone, you fill in a form, you get the money authorized in a day or so, it'll be put into your account. Through mobile and the security of identification, you can actually, within 5-6 clicks, actually apply for a £35,000 loan. It's in your account while you're sitting in the car company waiting for the finance. You can actually get a loan at 5.9% rather than 14.5%, because actually, and that drives loyalty because the convenience at that point in time that I can give value to the consumer, because I can serve them quickly, instantly, it's in their account, credited straight away, they can perform whatever they wanted to do. It's a means to an end if you can enable what they ultimately want to achieve. And I think in terms of driving loyalty, if you look at just the growth of mobile banking as a service, and you look at the interaction and engagement that companies are driving, as I said before, we get 26 times a month someone will engage with us on mobile banking. If they go into a branch, it's 2 times a month, and if they use online, it's 6 times a month. So if you can convert that level of engagement where you get touching every day, you're touching that consumer and they're using you, and you can turn that into loyalty, I think that's a huge play actually. So I think for me, customer experience drives loyalty. If you can design around the customer a great experience, they'll stay loyal to you if the value's there.
Let me just also mention that customer experience can drive loyalty, can drive frequency, and can drive real behavioral change. The thing that we've seen at Personal Capital, we have a desktop and mobile app that lets you take a look and keep track of all your money at all your financial institutions. So you see everything from balances to holdings to transactions. When we've looked at the behavior before downloading the mobile app and after, downloading the mobile app, people who have downloaded the mobile app subsequent to that event spend 10 to 15% less than they did beforehand. Now, why is that? The analogy I use is losing weight. Everybody wants to lose weight. How do you regulate that process? Well, you need to measure it. So what do you have? You get a scale. And the bathroom scale in the morning is great, but what if you had a scale that you could use every time you sit down to a dinner? That is a tremendous motivator of behavioral modification. Similarly, I think the ability to see what's going on with your money, how much you have, what your balances are, how much you've been spending, at any point at which you're considering a major purchase, what's clear from our data is that can drive significant behavioral change.
So actually, I'm going to use an example that happened recently, and I'll tell you why it's actually a good thing, like what Uber actually solved for me personally. But I'm pretty sure you're familiar with a conference called Money 2020 that happened actually a couple of weeks back, and that's like the big payment conference. And they had actually a developer event right before the main conference. And the team that won the Mastercard challenge came up with one of the most simple and yet elegant solutions. So everyone goes to bar for happy hours or restaurant, and you notice you have this little piece of plastic or wood on the table that holds the special of the day on a piece of paper, or what is the happy hours for that. They replace actually that little piece of hardware by something that actually integrate in it, BLE, beacon, and also a little cable that goes out to charge your phone. So I go in the restaurant, I can charge my phone, and what happened actually is like right there, the menu from the restaurant is visible on my phone. I place my order from my phone. That goes straight back to the kitchen or to the bar. The waiter come up, deliver the drink. When I want to leave that table, I just pay from my phone, and they're already informed that I paid. I saved a lot of time, and I can get way more drinks. I don't have to wait anymore, right? And that's what Uber did actually, is like they saved me time. And in a transaction, you know, like I want to get that service that good as fast as I want. The merchant want to get the money, and the payment is the less sexy part of the transaction. And how do you get that out of the way, or how do you simplify to a point that time is money, and you need to reduce that?
I'll throw out a little back to the contrarian, but there are risks in this, right? I mean, that's kind of interesting. Back to the, it's easier for me to transact. Is that necessarily better at the end of the day for the consumer when it's invisible from a transaction? Do I spend more? Not to pick on Uber, but do I spend more on Uber because that transaction is a bit transparent? It's kind of funny money at that point, and I don't have to think so much about the transaction itself. Is that a risk as we think about the future of commerce? Is that, back to the personal finance example, that transparency? Am I going to spend more, perhaps irrationally, as a part of that?
Well, I think while I've been arguing that access to the data and comprehensive data at the point of decision making is a valuable spur to behavioral change for the better in terms of saving more money, and I think the history of making payment more convenient has shown the opposite. In other words, you move from cash to cards, you move from cards to taps. The history has been significantly more spent.
Actually, it's already there today, but we all have in our brain kind of the price tag that we want to check and not check. But if anyone's got an iTunes account today and you know how many times you press that 99 cents button, at the end of the day, that's a lot.
You mean me or my 7-year-old son? Yes.
Yeah, exactly. You know, like just give them an iPad and next thing you know, you get a $200 bill at the end of the month. But that's something that we need to be mindful of that, and the user actually has a threshold where they decide that, okay, I'm good or I'm not good. But we have to be careful too. Yeah, when the price tag is low, we don't really think about it.
Interesting. So we've got about 15 minutes or so, and I've got a couple more questions, and then we want to open it up for some of the startups to answer some questions as well. One of the things that's interesting, we have some large companies in terms of Barclays and Mastercard here. At RocketSpace, we see one of the biggest themes generally sort of around corporate strategy is this concept around open innovation, the idea that disruption and innovation within large companies, that increasingly they need to look to the startup ecosystem to either disrupt markets that they're going into or to augment and complement product lines rather than just pure internal R&D. So I'd love to get some thoughts as it relates to why specifically in the world of fintech and as we think of the future of mobile and commerce, what is it about this that uniquely requires an open innovation strategy for you to survive? And there are sort of notable programs that Barclays has with their open innovation initiatives in that you do with Techstars and the escalator space that's in London, and obviously what Mastercard is doing. But I'd love for you to hone in on what is it specifically about this industry and this space that makes startup engagement so important.
So I think the answer to the question more than anything else is that we just don't know. We don't know the answers. And if you think about the ecosystem that's out there and examples today, there are so many startups out there with great ideas. And whilst I think that, and this is why we've been really we've invested heavily in an open API framework, and that's kind of one of our core strategies over the next year is to really open ourselves up into that ecosystem. The first level of investment for that for us has been the accelerator with Techstars, which we had our first cohort graduate in October, and we're just going around our recruitment for the second cohort. And that program will expand over the course of the next 12 months because what we see is significant value in actually leveraging the innovation that a small company and the agility that a small company brings to the table with the scale that invariably we have in terms of customer base and access to expertise in terms of so that it's a great marriage between the two in terms of how we can help grow the fintech community. And Barclays' partnership with MEF, fundamentally the reason we've gone down that route as much as anything else is because we see huge value in the entrepreneurial membership that the organisation has and how we can actually partner that with our startups and add value back into our startups and helping them to grow their seeds of their ideas and their businesses. But I think ultimately, any large institution does a lot of innovation internally, But I think it's when you open yourselves up and couple that, and it's combining different innovations together where you actually really see the value come to the table. And there's various success stories from our first accelerator which provide a degree of encouragement, both in terms of what they've gone on to do commercially themselves, but also the value they've created for Barclays in terms of that partnership. I mentioned DoPay as one example for the Egyptian wage and payments business, which we're actually entering into a commercial relationship for Africa. Market IQ, another ours, has just signed a deal with NASDAQ, and I think actually may not necessarily be related purely with our business, but fundamentally the opportunities that drives and the agility that's in that ecosystem. So
what, in terms of, and by the way, Diana Stepner, I see, just sat down, one of the stalwarts in the open innovation business strategy out here from Pearson Publishing. One of the things that I think is interesting, though, is there something, again, inherently unique about financial services, about technology around financial services that requires this types of disruption? Is there something uniquely about this industry that this strategy is required as opposed to others that require innovation and disruption through partnering? It's a battle to the microphone. Seb, do you want to jump in?
So again, I think you have to differentiate. I'm going to take the example of Mastercard. We see ourselves as a technology company. We have great assets, that being services, product, data, whatever you want. And by opening the...
Are you saying you're not a credit card company?
We are a technology company.
Oh, technology.
And we do payment.
You're not a payment gateway?
We do that, but that's the idea of opening we're opening the infrastructure, the backend, and that's based on technology. And what we are seeing is today you're having new solutions coming out. We talk about the complexity of POS, about different things. It's not the game of one company anymore. It's a cooperation, and you have to get different technology. Darren mentioned you have to get innovation together to get new solution out there. And by opening the technology to other partners outside of the financial tech industry, then you can start seeing new solutions. So we did that actually with OpenAPI. That's what we're doing. We're opening the guts of Mastercard and inviting everyone to use the services we have. And as an example, we've seen a very large car manufacturer in Europe that integrated our API into their navigation system. And I won't give you the name of that car manufacturer, but that was coming completely outside the field of commerce or payment. But why they needed that was because the data we can provide is we can tell that driver that, yes, that gas station that is in 20 miles is closed at 8 p.m. And based on your tank capacity, you better go to the next one, which is 40 miles, which will be open at 10 p.m. We know this type of data from the relation we have with the merchant, and that is something you can provide and get access to. And that creates a new solution, and that's outside the scope of financial technology. So we never know where innovation is coming up.
That's great. So obviously as it relates to that, APIs and services, how did you go about developing and telling the world that these services are available? What are you doing to tell the world? And presumably it's a part of the conversation of not only, hey, startups, we have something, come and tap into to what we're doing, and you have an existing technology, or hey, go build some new technology based on the world of possibility that we're opening up to you. How are you getting the message out other than sitting on stages like this?
So from a Mastercard point of view, we've been very active actually over the past year, reaching out to what we call independent developers or the startup world, entrepreneur world. We did actually even first I chat a small company called RocketSpace. I don't remember the name of the Moderator.
It's a giant company. What are you talking about?
Yeah. So and what we are doing is like you have to educate actually the community out there that you are opening a lot of things. And again, Mastercard's got a lot of what we call private API that were developed actually for one-on-one partnership. So like with our bank partner, we have relation direct integration, and some of these can't be open. We have to be realistic. There is sometimes some regulation or security issue. But we are looking and going through the catalogs of private API that we have today and trying to figure out which one will benefit the entrepreneur startup world. And the best way to do that is actually to go and attend hackathons, developer conference, go and talk to startups, go to and talk to incubators, participate. Actually, we also are a partner with Techstar, try to find way to reach out to these developers and get their feedback. And when you understand what they're trying to achieve, what they want to develop, my job is to go back inside Mastercard and be the voice of the small guy. And just look at what we have and say, okay, we need to do an effort and bring that to the public world.
Darren?
So I think we were talking beforehand, and I think we share similar strategies. So I think, fundamentally in terms of getting, the big thing for us is making ourselves relevant to that ecosystem. So we've invested heavily in space in Tech City, an escalator space. It's an innovation loft. We host events for fintech companies, and through the last year we've actually had about 2,500 events held at that site. And I think that just makes us relevant. So what value can we bring to that community as much as anything else? Through the accelerator program, obviously that gets some visibility as well. And I think going back to your previous question about why is financial services kind of ripe in that respect, I'll give you an example. We opened up our APIs for Ping It, our mobile payment solution. And one of the companies in our accelerator, we sat down with them on a beginning of the week to talk about what we wanted to do, gave them an idea, and in 48 hours they'd actually made it a live service. And inherently we would not be able to do that internally, but from that we can actually leverage that capability and that solution and actually push it forward. So I think there's the speed of execution. But I think ultimately, in terms of making the relevance, I think it's about being very open and transparent. I know Mastercard do this as well, but participating in hackathons and learning from developers as to what works, what doesn't work, what would they want to see, how would it help them grow their businesses. I think that's kind of the key messaging really that we need to drive forward.
Great. So I think we'll finish up the session here with a little bit of a trend setting here and thinking about our trends here for over the next couple of years. So if you can put your 18-month hat on. This is not the 5-year hat, our 18-month hat. And you think about fintech, commerce, these trends. What are sort of the 2 or 3 things that you think are going to become sort of, and what I'm really interested in is really 2 things. One is, what's sort of the pointy end of the stick thing, something that you think is emerging that might surprise us? And then what's something that really is going to come to mass adoption, the thing that the masses are now going to adopt as a key bit of tech across the trends that we've talked about today? Seb? Because you're sitting next to me, you get to go first.
Yeah, and 18 months is short term for me. So I think what we're going to see is like the acceptance of mobile wallet. Whoever's going to be the provider, but users are going to start using it more and more. It's going to go outside of the scope of Apple Pay. It's going to be in a other type of device. And again, we're going to also see some new solution or new integration that will leverage, again, like sensors, biometrics, whatever. And the way I see it is like today, we are revolving around a bunch of sensors. I have a phone, I have another one there, I have bands and everything. And I really think that companies are going to build new solutions like Bionym, that where actually the sensors will be revolving around me. And what I describe it is like, we're all talking about the Internet of Me today, so the Internet of Things, and it's going to become the Internet of Me. And the experience is going to be customized, and everyone wants to be treated like a VIP when you walk in a store or whatever, and that's going to be facilitated actually by the fact that this technology is going to be more and more integrated, and the Internet of Things will be like the supporting underlying layer to enable that. So Internet of Me, IOM.
IOME? Great. Bill?
The next 18 months, the phone is an authenticator. And that's not necessarily thinking about it in terms of mobile wallet or a large network of authentication. But let's go back to the Uber example. What is the device that makes both ordering and payment so easy on a one-touch basis? It's using the phone as an authenticator. And there are certainly security issues. I mean, when you order an Uber, you don't put a password in, and you're ordering it with a phone that could be stolen or lost. Nevertheless, it's that use of the phone as an authenticator that I think is going to be most impactful over the next 18 months.
Very good. Darren?
So I think to the point, 18 months isn't a very long time frame. So fundamentally, it's not going to be a massive radical change from today, I'm afraid. I think actually what we will see, and Apple's going to obviously have an impact in terms of actually starting to drive mobile payments as that goes into the market. So I think you will see obviously an increase in adoption of mobile payments. and through that, obviously, the authentication through the mobile phone. I think the one thing I'd probably emphasize, actually, as much as anything else, you're probably going to see a hell of a lot more large companies entering into innovation with small companies and opening themselves up. So I don't think anything that we're doing or Mastercard are doing is necessarily unique, but you'll see more companies actually realizing that actually they need to be more open and actually start playing a role in being open with the fintech community. And I think that's what you'll see accelerating. And from that, you'll see an acceleration of things come to market quickly, sponsored or partnered with big companies.
Yeah, I agree with that. And I would go back to the example of PayPal, where I was in the early days. What big companies are great at doing is things at scale. And what small companies are great at doing is moving fast. Well, if you want to move fast, it's very difficult to be developing infrastructures that don't already exist, and particularly when you need ubiquity, as you do in the payment arena. So at PayPal, we had this notion of OPN, other people's networks, and essentially PayPal was a fairly lightweight wrapper around 3 other OPNs. First was internet connectivity, the second was the credit card system, and the third was ACH. And all PayPal did was use the existing ubiquity of those networks to go ahead and create a new service. And it's, once again, similar to what Uber is doing. It's resting on the backs of existing networks.
Excellent. Well, first and foremost, I want to thank Barclays for being a sponsor for this session. Thank Darren, Bill, and Sebastian as our expert panelists giving their advice here. Thanking Billy from Pay Near Me, Matt from InStore, and Balaji from BioNim. I want to finish up a tad bit early here so that there's an opportunity for you to ask some questions for both the panelists and the startups. We have a couple of minutes here, I think, until the next session comes through, so we're going to finish it up and give you an opportunity to speak with them down here on the corner edge. Again, I'm Eryc Branham from RocketSpace, and thank you for joining us today.